In this video, I'm going to tell you how I'm investing in this uncertain climate we're in. It looks bullish, but we always have the threat of recession kind of hanging over our heads. An uncertain time, I want to say, for the market is trying to decide where it's going to go. So I'm investing in the future with three companies, three stocks that I think are used and appeal especially to millennials and to Gen Zers, while I'm also investing in five giants, which I think is the conservative way of investing until we get past these earnings of Nvidia's. I'm making moderate investments in three stocks I think are appealing to millennials and to Gen Z especially, because they're stocks that you use. The first of these is Reddit. It's a stock even I use, okay? And I'm far beyond, I'm a boomer, let's say. And it's attractive to me because I do use it, and that's actually how I got interested in it. But it IPO'd on March 24th. And at first I was enthused about it, but then the price action wasn't so good. So then I wasn't enthused about it. But now I've come around to where I've made a moderate investment in it simply because of the meme stock craze that we recently went through. This has the markings of a meme simply because that's sort of what it's involved with to a degree with Wall Street bets. So that's how I became familiar with it a lot. And I also just watch random things on it also because it's interesting. Okay. But the price action from the IPO was not good, and I suppose that's the main reason why I got unenthused about it. But then it started to pick up, and especially has been picking up a lot the last month. I happened to invest in a moderate amount on May 15th, and that was right before they announced a deal with OpenAI. So I got very lucky, and it went up 10% immediately. And the deal with OpenAI is that they're going to share data with OpenAI to train its artificial intelligence on how people interact with each other. Now, OpenAI has made a similar deal with Google. I'm enthused about Reddit making this deal, and that's how I got lucky, very lucky, that I did it right before they happened to announce. And I had no idea this was going to happen. I just was following the price action and noticed that it was going up in the last month. And then it took a little dip, and I decided, yeah, I'm gonna go in on it simply because it's a stock. It's a company that I use for my own information. Looking at the 1 month chart, you can see that it went up steadily in the last month. Now, it was up higher and then it came down after the IPO, but then the last month it's been going up. Do you think somebody knew something? I always wonder about that. But it went from $40 to over $60 in the last month. And it took a little dip right before it spiked after the agreement with OpenAI. So I lucked out on jumping on it. But I always like to invest in a stock when it's starting to take off. And I think we're in a good company here. Simply, I think it's too early to look at earnings and revenue and all that. We will wait for the next report and see how it's doing. It's something to keep a watchful eye on. But I think I'm responding partially to, I always regret it, not investing in Facebook when it first came out. And so I don't think this is Facebook, but I think it is social media, and I like their product, and I love this deal with OpenAI, and I think it shows probably good management. So I'm willing to take a bet on it. The next stock is Celsius, symbol CELH, and it's an energy drink that I know millennials and Gen Z use. My personal experience always enters in strongly, which Peter Lynch always recommends following what you notice other people are using. And I think it's a healthy alternative to Monster, which they named that energy drink correctly. Celsius tries to be a healthy energy drink. It has a lot of vitamins, and it has green tea leaf extract. So it tries to say that you're going to burn fat more, so it could help you lose weight, although it's not strictly for that purpose, of course. But it's mainly an energy drink, a healthy energy drink, and that gets my vote if people use this instead of Monster, and it is taking market share from Monster, so that's good news. Looking at the 1-year chart on Celsius, you can see that it's gone up considerably. It's gone up from about $50 to $93, so it's getting close to doubling in a year's time. Now, its price to earnings, of course, is very high. It's at 85, but its earnings growth rate is a wonderful 48%. Now, if you believe we're in a bullish market, the 48% earnings growth rate is what I focus on. And again, I'm strongly affected by seeing Gen Z and millennials using this product. So I made a moderate investment in it. I think I'm going to stick with it. Its relative strength is 72%, which is very good. The third stock I'm investing a moderate amount in is Robinhood, whose symbol is Hood, HOOD. And it's a brokerage used by many young investors. And I think it's because you can do many things on Robinhood that you cannot do on other brokerages, such as trade crypto. About 20% of their revenue comes from crypto exchanges at this point. So it's very significant. And they have some things like letting you go on margin and so forth that I find are just more difficult with my brokerage. And I hear of them doing things at Robinhood from my younger investors that I cannot do on my brokerage. So I think there's a lot of attraction to this. And they just reported record earnings. And they had earnings profits of 18 cents per share. To show you how dramatic that is for Robinhood, the same period a year earlier, they had a loss of 57 cents per share. So it's a major turnaround. I think crypto is a part of it. I don't think it's all of it. I think it's because they have a lot of flexibility in the way they do things, which is a lot different from traditional brokerages as far as I can see. But I'm very interested, and I'm interested enough to invest in it. And looking at the 1-year chart on Robinhood, you can see they've gone from about $9 to over $20. So they've more than doubled in a year. So this is a very bullish chart, I think. And they're well above their 50-day moving average of $17. Their relative strength is 64, which is good. This is a stock that's doing well, and I think it's their flexibility that attracts younger investors, and I think they're doing well with it. And the crypto is an opportunity that they can do here that they can't do like this in many traditional brokerages. So I expect this stock to continue to go up. Robinhood does have a high price to earnings of 100, but it has a wonderful earnings growth rate of 32%, And again, their earnings recently just released are a record. So I think they're hitting their stride, and I'm investing in them mostly on future prospects. In an abundance of caution, I'm investing in the giants in artificial intelligence, and I consider those to be Nvda, Amazon, Google, and Microsoft. It's amazing how these companies have done, how these stocks have done in the last year. Nvidia, of course, has made about 206%, and Microsoft is a slow-moving giant. It's made about 33%. Google has made 45%, and Amazon has made almost 60%. So these stocks have done very well over the last year. Nvidia reports earnings this Wednesday on May 22nd. So I think that's going to determine the course not only for artificial intelligence for a couple months to come at least, but it's likely to direct the whole stock market for the next half year to 9 months, simply because most of the growth in all stocks just about is coming from artificial intelligence. When the market is in an uncertain place like it is now, I like to invest in the biggest companies, and I think the market could broaden out. It might be that the artificial intelligence stocks stop going up as much as they have been because they've just been skyrocketing. That might slow down and the market might broaden out, which would be a good thing. And that's part of the reason why I'm investing in Berkshire Hathaway. Also, it's kind of a backdoor way to invest in Apple because even though they've reduced their percentage of Apple by 13%, they still own about 40% of the stocks that they invest in are Apple shares. So it's sort of a backdoor way of investing in Apple and getting some broader exposure to insurance, railroads, banks, and oil companies, of all things. So it's a very different sort of investment, and I'm broadening out a little bit, but it's a gigantic stock. And he has a cash pile of like almost approaching 200 billion. So it seems like it's very safe, and I'm sure he likes the high interest rates, and so inflation really isn't a threat to him that much. Looking at the chart, you can see that it's gone from about 320 to almost approaching 420. So in a year's time, wow. And that's supposed to be a conservative investment. But I think he's benefiting from inflation. Berkshire Hathaway has a price to earnings of about 20 and an earnings growth rate of about 19, both of which are good. I see it as a conservative alternative to some of my other stocks. So that's the way I roll. Thank you.